All right, ready to dive into some of the rules surrounding sustainable investing in the EU?
Let's do it.
Today, we're going to unpack the Sustainable Finance Disclosure Regulation, or SFDR.
Yeah.
Now, I know what you're thinking. This sounds about as thrilling as watching paint dry.
Hmm.
But seriously, this regulation is a big deal in the financial world. And we're here to break it all down. No jargon, promise.
Yeah, I mean, it might not sound super exciting at first,
Right.
but the SFDR is actually doing something really important. It's trying to bring transparency to sustainable investing because right now it can feel like, well, have you ever tried to order a coffee in a foreign country where you don't speak the language?
Yeah.
Because that's kind of what it feels like trying to figure out what sustainable investing actually means sometimes.
I feel that. Sometimes regular means a double espresso,
Mm.
and sometimes it means, like, a latte.
Right.
Right.
So the SFDR is trying to make sustainable investing as clear as a Starbucks menu.
Okay, I like where you're going with this.
Yeah.
So less financial hieroglyphics, more like a universal language.
Exactly. So you can actually compare all those green funds out there and see what's what.
Okay, so how does this, like, universal language work? How does the SFDR categorize these funds?
So the SFDR uses these categories, Article 6, Article 8, and Article 9, and each level, kind of shows how serious they are about sustainability.
Okay, so Article 6, let's start there. What's the deal with that?
So Article 6, that's like the starting point. These funds, they might not be laser focused on sustainability, but they still have to be upfront about how they're handling sustainability risks.
So even if it's not their main selling point, it's about being transparent, at least.
Right. They're acknowledging that, like, yeah, these risks exist. Whether or not they actually do anything about them is a different story.
Gotcha. So what about Article 8? That's where things start to sound a little greener, right?
Yeah, definitely. Article 8, that's where we see funds actually saying, hey, we care about the environment or we care about social issues, doing some good.
So not just acknowledging the risks, but trying to make a positive impact.
Right, exactly. They also have to come clean about how much of their investments are actually meeting those criteria. So, there's some accountability there.
Okay, so they're putting their money where their mouth is,
Yeah.
at least a little bit.
Yeah.
Now let's talk about the big leagues. Article 9 funds, these are all in on sustainability, right?
Oh, yeah. Article 9, this is like the gold standard. For these funds, sustainability isn't just some box to check. It's their whole reason for being.
So for an Article 9 fund, sustainable investing is like their main course, not just a side dish.
Exactly. And they can't just say they're doing good. They have to prove it. Show that they're actually making a positive difference.
Okay, so we've got our 3 levels, Article 6, Article 8, and Article 9.
Yeah.
And each one shows a bigger commitment to sustainability. But I have a feeling, like, in real life, it's not always so black and white.
Yeah, it's definitely more nuanced than that. I mean, one of the big issues is the SFDR, it doesn't actually say what sustainable investing is. Yeah, so like, what does do no significant harm actually mean in the real world? It's open to interpretation.
Yeah, I see how that could get messy fast. So has this lack of a clear definition caused any issues so far?
Oh, yeah, big time. We've seen funds that were originally labeled Article 9, the top dogs, later downgraded to Article 8 because of, well, basically because no one's totally sure what counts as truly sustainable.
Oof, that's got to sting a little. For the funds, but also for the investors, right?
Yeah.
So what else makes the SFDR tricky besides, not really defining its main ingredient?
Well, the rules themselves, they keep changing, which makes it hard for funds to, like, keep up.
So it's like trying to hit a moving target.
Yeah, kinda. And then on top of that, to actually follow the SFDR, funds need to gather and analyze tons of data about environmental stuff, social impact, the way companies are run. It's a lot.
It sounds like a logistical nightmare.
It can be. And there isn't even one agreed upon way to measure all of this stuff. So it's not as simple as just slapping an Article 8 or 9 sticker on a fund and calling it a day.
Right. There's a lot more going on behind the scenes. But let's bring it back down to earth for a second. For the average person who's not a sustainability whiz, why should they even care about the SFDR?
It's a good question. And I think the main takeaway is this regulation is all about transparency. It's about giving you the information you need to make informed decisions about where your money's going.
So it's like, instead of blindly trusting what a fund tells you, you can actually look under the hood and see what's really going on.
Yeah, exactly. It's all about, giving investors more power. And you don't have to be an ESG expert or anything. It's more about having a way to compare these funds apples to apples.
Right. But it's easy to get lost in all the jargon. Like, let's say I'm looking at a fund and it says it's Article 8. What am I actually looking for?
Good question. Just seeing that Article 8 label, that's not enough. You got to dig a little deeper, see what's really driving their ESG strategy. So when you're looking at that fund, Pay attention to the environmental stuff, like, are they thinking about carbon emissions, water usage?
So, like, are they actually looking at the real-world impact of these companies?
Exactly. And don't forget about the social side of things, too. How do they treat their workers? What about human rights? Those things matter.
It's like, don't just invest in a fund because it says it's green. Invest in a fund that actually lines up with what you believe in.
100%. And the G in ESG, the governance, that's important, too. How is this company run? Are they transparent? Do they have good leadership?
Yeah, governance is huge. It's like, are they walking the walk, not just talking the talk?
Exactly. And this is another area where the SFDR can be really helpful because it pushes funds to tell you more about how they're engaging with companies. Are they like actually trying to make things better, or are they just sitting back and hoping for the best?
So it's about actively using their influence to push for change, not just like checking a box and calling it a day.
Exactly. It's about realizing that investors have power and they can use it to make a difference.
Okay, all of this is starting to make sense. But I'm not going to lie, it's a lot to keep track of. Do you ever worry that the SFDR, while trying to be helpful, might actually make things more confusing for the average person?
Oh, for sure. There's always that risk with new regulations. And let's be real, ESG investing already has a lot of like technical terms and whatnot.
Right. So how do we keep the SFDR from becoming just another layer of financial mumbo-jumbo that only experts understand?
That is the million-dollar question. I think the key is making this information like user-friendly, Get rid of the jargon and explain it in a way that makes sense to everyone.
It's like we need an SFDR translator or something.
Totally. And we're actually starting to see some cool stuff happening in that area. There are these fintech companies that are using tech to like break down all this ESG data and make it easy to understand.
So it's like having a personal ESG advisor in your pocket.
Exactly. And that's where I think the SFDR can really shine. It's not just about more rules. It's about empowering people to make decisions that align with their values.
Love that. But let's be real for a sec. Some people are going to say, okay, sustainability is nice and all, but will it make me money? What do you say to those who still believe that sustainability and profitability are like oil and water?
I get it. It's a common concern. But there's more and more evidence that shows companies that are good on ESG, they're actually better investments in the long run.
So doing good and doing well, they're not mutually exclusive.
Not at all. Think about it. These companies that are on top of sustainability, they're often better at managing risk, they're more adaptable, more innovative, because they're thinking about the big picture.
That makes sense. So it sounds like the SFDR, even though it's still a work in progress, has the potential to really change the game when it comes to investing. But let's bring it back down to the individual investor for a moment.
Yeah.
How did they take all of this information and actually use it to make smarter decisions? What are some practical steps they can take? It can feel like information overload, for sure. How do you even begin to process all of this?
It's a lot, yeah. But you don't have to become like a sustainability expert overnight. Just start with what you know. What do you care about? What kind of impacts do you want to make with your money?
So it's about making sure your investments reflect your values, right? Like if someone's passionate about, say, fighting climate change, they might look for funds that focus on renewable energy or things like that.
Exactly. And don't be afraid to talk to your financial advisor about this stuff. Do they even think about ESG when they're making recommendations? If not, maybe it's time to find one who does.
That's a good point. You get to have a say in how your money is managed. But at the end of the day, some people are going to be most concerned with the bottom line. They might be thinking, sure, sustainability is great, but will it help me retire? Will it help me reach my financial goals? So what would you say to people who are worried that sustainable investing means sacrificing returns?
I get where they're coming from, but honestly, the world is changing. It used to be that people thought of sustainability as like a nice thing to do if you could afford it. But more and more, people are realizing that companies that take ESG seriously, they're actually the ones that are better positioned for the future.
So it's not just about feeling good, it's about making smart financial decisions for the long term.
Yes, exactly. Because the world is changing and companies that aren't keeping up with things like climate change, social issues, they're going to be left behind.
Right. Like sustainability is becoming a matter of like keeping up with the times, not just being green.
Right. And as more investors realize this, we're going to see more and more money going into these sustainable investments, which in turn will push more companies to up their game on ESG. It's like a snowball effect.
So it's about aligning your money with your values, but also potentially getting ahead of the curve. This has been really eye-opening, and I think the key takeaway here is it's not just about understanding a bunch of complicated rules. It's about recognizing the power that we have as investors to shape the future.
Couldn't have said it better myself.
Well, there you have it. Next time you're looking at your investment portfolio, don't just ask yourself, what's the potential return? Ask yourself, what kind of future am I buying into? That's all the time we have for today, but we'll see you next time for another deep dive.